It's time to continue on and go back a little bit in time and take a look at the first real big filing we had come out of the DTC, which was DTC-2021-002, Revise the Clearing Agency Investment Policy. Now, this does affect three different groups here. So the affiliates of DTC being NSCC and FICC also had a similar filing as well. Same text applies to all three of these in this case. You can see here they were all approved on April 16th. So this video will knock out FICC 2021-001, DTC 2021-002, and NSCC 2021-003. Now the reasoning for this, the proposed rule change, the text here in paragraph A. 1. Enhance determination of investment limits for investments in bank deposits. Number 2. Clarify description of funds in the Government Securities Division of FICC, which is the Fixed Income Clearing Corporation. So the purpose for this change, of course, was to, number 1, enhance methodology for determining investment limits, which we just said. And number 2, clarify the description of certain investable funds of GSD as described in greater detail below. Now you'll notice I circled this little small 1 here because every time you see that, if you look towards the bottom of the page, it'll have a section with a little underline above it. And if you match the number circled here to this, it will actually explain what they're referring to. So this is a very key way to find out critical information that you wouldn't otherwise be able to see because they hide it in the super notes. That's what it's called, is a supra note. Now here I have a little text bubble out because it mentions Rule 17 AD 22E16. So I went ahead and showed you how you break down this rule. So we have 17 CFR 240.17 AD-22. Now this overall rule is just saying standards for clearing agencies. So once we have this, it'll break it down for us, and I went ahead and broke it down in order so it's easy to read. So A is committed arrangements without material adverse change provisions, including, and then you got to go find these and put them all together. Each registered clearing agency that is not a covered clearing agency shall establish, implement, maintain, and enforce written policies and procedures reasonably designed to, as applicable, use or at a minimum accommodate relevant internationally accepted communication procedures and standards in order to facilitate efficient payment, clearing, and settlement. And then we have E. Each covered clearing agency shall establish, implement, maintain, and enforce written policies and procedures reasonably designed to, as applicable, safeguard the covered clearing agency's own and its participants' assets, minimize the risk of loss and delay in access to these assets, and invest such assets in instruments with minimal credit, market, and liquidity risks. And I know it cut off the bottom part of that sentence here. It's kind of hard to fit all this on one screen. Apologize about that. But in essence, this is the first sign we see of ass covering. Now, the investment policy changes in essence. So before, it was a credit-based system. Afterwards, it still is. Pretty much what they're doing is they're making it to where the size of the bank matters. So it's going to be harder for the smaller groups to get use of these services because they're trying to minimize risk, and this was back in April, of course, that this was approved. The proposal is designed to mitigate the clearing agency's risk exposure to smaller bank counterparties. So there you have it. It's that simple, everyone. You can learn a lot by reading this stuff. And that was just the first real big one. We still have several more to cover. And yeah. Let's do it.